Alright everybody, here we are, and welcome to my newest segment of Marcus A Look Ahead. It is Sunday, December 9th, 2018. I guess let me start off with this. As most of you know, I did not do a video on Friday, and that was because I had to take my dearest friend in the world, Ed Hall, who is a Pearl Harbor survivor, on December 7th, which was Friday, to Nellis Air Force Base, where he was honored. And let me tell you something, they rolled out the red carpet for this guy. The Thunderbirds put on a show for him. Everyone at the base was incredible. And they treated this man with the respect that he deserves. Anyway, with that aside, that's why I did not do a video on Friday. Most of you know that. A lot of you wrote to me, "Hey Greg, where are you?" I guess you didn't get the memo. But that's okay. We are here now. Let's talk about what's going on. And let's try to look ahead towards next week. So, on Friday, stocks got walloped yet again. Shouldn't it be a surprise to any of you? I have outlined for you that I believe the market would still fall under pressure. I explained to you how you should be looking at cryptocurrencies, believe it or not, to gauge risk in this market, in the stock market. I think it's a relatively good indicator. I want to talk about that as well. So before we go over to my website and look at some charts, which I want to do, it's important. We're going to do that together. Let's put a little perspective on a few things here. No secret what's going on here in the bond market. It's pretty profound. And even the mainstream is talking about it, so they must understand there is an issue. And I want to show you this real quick. So again, we understand there is a rift in the yield curve. We have a partial inversion. And here we go. We're going to have a look at this here. The 2-year and the 3-year are both paying more than the 5-year. You got that? So there's your inversion on that part of the curve. Now, if you look at the 10-year, we're at 2.85. So let's put that into perspective. The entire curve is inverting. You got me? This is huge. What most people are looking at, if you're not aware, is the spread between the 2 and the 10. And why is that? Because once the 10-year historically moves below the yield of the 2, once the 10-year yield is lower than the 2, without exception, this has predicted a recession, sometimes a major recession. It looks like we're moving towards that right now. So with that in mind, we need to keep our eye on the bond market. Forget the stinking stock market. You all know that. At least I hope you do. Everything values off of bond market action, period. Well, in a real market, except for gold and silver, which are off the freaking Richter scale fake. You know that. It's just an incredible thing. The dollar is something else that we need to watch. We're going to talk about that in a moment as well when we go to my website. But again, let's set the scene here. There's this whole issue going on with OPEC, what they're going to do, what they're not going to do. And crude oil, believe me, and I know you get it if you follow this blog, has a lot to do with where this market goes. The crude oil... Crude oil, let's put it this way. The price action of crude oil is rigged and twisted. You all know that. And the real price would be much lower than what it is now, based on global demand. Global demand is falling. Why? Because we are slowing down on a global level, not just here in the United States. Hence, yield curve. You got it? It's just so easy to understand where we are going. We are not in an economic boom. We are not even really in an economic recovery, despite what you're hearing from our president and everyone else. It's fake. It's propped up on the back of exploding debts, exploding deficits, no end in sight, central bank easy money now pouring into this market for as far as the eye can see, and it's just not going to stop because the environment is going to be faked even further until we hit the wall. Then we're going to get a vertical drop. There's no doubt about it. It's just not real. And I laugh every single time I hear about how great our economy is. Really? Where would we be if it were not for world central banks, not just the Federal Reserve, who's been propping all this up, along with other central banks who are buying each other's debt? That's what's going on. Again, I have no proof of this, but I believe it's happening. I actually have a little window into this because I have a friend of mine who's kind of involved in this. You know who you are out here. Anyway, that's the truth. So this is going on. I can say that for a fact. World central banks are buying each other's debt, keeping it off balance sheet so people are not able to see what's going on. It's fake. And I can't stress that enough. Everything's fake. So then we got this China trade issue. And it's an issue here. We're hearing all kinds of things. There was a truce. Well, it's not really a truce. There were concessions made. China's saying no. So this has got the market rattled. This is why we're seeing the sell-off right now. Markets are based on confidence. Confidence and a belief that we're being told the truth. Believe it or not. But we're not being told the truth here. We're being lied to. Deceptions, falsehoods, you name it, that's the way it's going right now. And that's why we're seeing the market suffer right now, period. The middle class is going to pay a terrible price for this. You all know that. There's no doubt. If you have a doubt about that, unfortunately, you are deluded. Anyway, with that said, let's make our way over to my lovely website, traderschoice.net. There is a link in the description of this video. It'll take you there. If you happen to be on my website right now, let's have a little bit of fun here. All right, number one, and I want to start off with this. Go all the way down to the bottom of this page, okay? This is my lovely gauge here. Technical analysis for SPY. SPY is the ETF that tracks the S&P 500. For the millionth time, people who are looking at this, let's pay a little attention. Right above the gauge, see right there? Technical position of SPY month. You got it? Month. Okay. Do not day trade off this. Don't weekly trade off this. This is a monthly gauge. We have a sell signal here, as you can see. Let's dig a little deeper. We got 9 sell signals, 9 neutrals, and 6 buys. Look, here's my take, just real quick on this market. You can look at the positions I have open on my website, traderschoice.net. 2 of those positions, which I still did not update yet, have expired. They expired on Friday. I got to keep 100% of the lovely premium. I'm happy to say that. I still have several other positions open. What does that mean? Well, that means I'm going to wait for these things to expire. I have several positions expiring this week. Let's go look at that. Just go right up to the center here. My trading chart. Let's look over here, and you can see all my current credit spreads again. I'm going to update this. Maybe by the time you are looking at it, all my current ones on my positions that did expire are not there. Anyway, I'll take care of that at one point. So let's look dead center here at my trading chart. Again, you can put in any symbol you want. Right now, it's on SPY. Let's just take a big snapshot of this because you know I'm a big picture kind of guy. What do you got? I want to first pay attention to the upper part here. We have the 3 bands. See those 3 bands here? We are below that middle band. We got a red candlestick here. This tells me that this market may still fall under some pressure here moving forward. And we need to be cautious. Going back to my own positions that I have, if I enter any new ones this week, I will let you know. I am being very specific with regard to positions I enter. I am not trading an index. I am looking for specific stocks. You understand? That I think are not going to get beat up no matter what the market does. So let's again, and trading credit spreads, I almost don't care for the most part the direction. It doesn't matter as long as the let's say, for example, if I'm selling a put, okay, and I'm hedging that by buying a put at a lower strike price. This is how credit spreads work. I don't care. My hedge is just a hedge. It's kind of an insurance policy. The puts I sell onto the market. I just don't want the price of the underlying stock to hit the strike price. As long as it stays 1 penny above, I'm great. I get to keep 100% of the profit. This is how you trade this market. It's too volatile to do anything else in my view. If you are trading naked calls and naked puts and you're doing phenomenal here in this market, well, my hat is off to you. You're smarter than I am. I just can't do this. And I think the way I trade is much more safe than doing that. Yes, you will have slow, steady returns. Will you lose a trade once in a while? Absolutely, but you'll never, ever allow yourself to take a big loss. You'll trade out before you let yourself get hurt. It's so simple. Anyway, while we're on this chart here, I want you to put in GLD, the paper derivative of gold. This is not real. It doesn't exist. It's not on the elemental chart. However, it's a rigged game. What I want you to notice about this chart here, all right, we all understand that money printing is going to go on here into oblivion with now our president and the Federal Reserve on the same page, keeping easy money flowing into this market for as far as the freaking eye can see. You got it? Take note here that these green candlesticks are above that. The 3 blue bands you see here, we're above that. That is very bullish, okay? It's a bullish sign. Let's do the same thing here with SLV, enter. What do you notice here? Okay, we're not above that top line, but we're still above the center line. That is also bullish too. You understand? Very simple. Let's move directly over to our bond market chart. Look at this. You want to talk about off the Richter scale bond buying? This is where we're getting that inversion here of the yield curve. People pay attention to this. Can't stress that enough. Let's go just below that and look at the dollar falling off of a cliff. I'll tell you, there's so much going on here. So many dynamics. A big part of this is geopolitical as well. And the easy money drug that's been pouring into this market, which seems like time immemorial since the meltdown of 2008, is becoming toxic. People, I know you get it if you follow this blog. I can't stress this enough. Bet against this debt. Become your own central bank. That's what you got to do to beat this twisted system that we are in. The middle class is on the verge of getting decimated when this corrects to fair value. Decimated. And I legitimately care about every single one of you. You all know that. I will not let that happen to you on my watch. That's the truth. I made that promise to you years ago, and I will not let you down if I have a say-so in it. So anyway, with that said, keep your eye on all this stuff, people, and I will see you all in the morning, and we're going to make sense of it then too. I hope this makes sense to you. If it does, please share this video. Get it out there. Let's get more people on board. Again, understand this, people, and this is the core of my being since, I can't tell you how, since day one. We are all responsible for each other. I have your back. I hope you have mine. We got to have more people on board because in my view, we are looking at a worst case scenario unfolding before us. Now, that doesn't mean it's going to happen tomorrow or the next day. We still have time. We still have some time here to try to get this out and let people see what's going on. With that said, as you know, I'm going to say it again. I love all of you. I will see you on Monday, which is tomorrow morning.